Good evening and welcome to the Australian Stock Market Show. Well, last week the buyers regained control, pushing the All Ordinaries Index up by around 0.5%, while also continuing the recent pattern of weekly price reversals we've seen over the last month. So with the market still stuck sideways, the critical question now looming is what will trigger an upward breakout from this sideways movement? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at major world currencies. And for our main topic in tonight's show, we get into the top 5 stocks, REITs or ETFs to buy. Is it smart to dollar cost average? First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like JB Hi-Fi, Rio Tinto, Rural Funds Trust, major world currencies and much more. So get comfortable as we'll get into those soon. I'm Dale Gillam and I'm your host for tonight, and joining me are Wealth Within's highly experienced analysts and professional traders Janine Cox and Philip Tortevsky. Good evening, team. How are we tonight?
Good
awesome.
evening.
How are you?
Doesn't Janine look wonderful in a nice pink jacket?
Thank you for the compliment.
A rose
That's lovely.
between two bums, basically.
Well, I thought it was thorns, but hey, I guess so.
Anyway, tonight, as mentioned, we get into major world currencies. But first, let's take a look at this week's hot stock tip. Phil, what have you got for us tonight?
All right, so the hot stock tip for tonight is Treasury Wine Estates, stock ticker code TWE. So let's get straight into it. On your screen right now is the marketindex.com, and Treasury Wines, as the name suggests, is a global wine company and it has consumers in more than 70 countries. It is a global wine retailer. Some notable branding of it is the Penfolds range, which I'm pretty sure everyone on this panel has had a taste of. Yes, quite nice. Yeah, and some performance on Treasury Wines. It's got a 1-year performance of positive 12.4% versus the sector on a 1-year basis, which is positive 18. So it is lagging the sector a little, but it is outperforming the ASX 200 on a 1-year basis by quite a bit, which is doing 1.66. It does have a market cap of over 10 billion and it is ranked just outside the top 50. So it is one of the higher cap stocks on our market, one of the bigger players. Now let's get into the juicy stuff, and that is the chart. And I want to bring up the monthly chart for now to start us off. And I mean, this stock's really interesting, Janine, because obviously it's had a period, especially since March 2014, where it gave us that really big expansion into an uptrend. But then the stock capitulated from 2018, falling all the way back down to the low in October 2020. Now, that fall signifies about a 58% fall. And we know, stocks over their lifetime, if they come back around that 50% mark, it's that psychological level, that discount, 50% discount. We see it so much in so many things. And, it obviously has attracted some interest at these levels. So if we just go back to the chart, you'll see I've also got a momentum line here that the stock's come back to as well, that it's tested a couple of times, most recently Jan 2024. But the most exciting part for me is this $10.55 level that I've marked. Now you'll see since January 2022, these green dots resemble each time the stock's come back to this $10.50 level and touched it. Now, what I find quite interesting is that this is the first time, particularly May 2024, where the stock's attempted to come back to this $10.50 level but failed to touch it. So it's been more bullish than all the previous 4 times in the past since 2022. It's given us a beautiful run up in June, considering the market's absolutely done nothing, and it is bucking the trend of the overall market. But I do have a rectangle box in pink, and the reason I've got that box is because this is a level of resistance, so you need to be careful if you are looking at this stock. There is previous resistance from around August 2021 and this big period here where it made a peak, and most recently it did the same in April 2024. So although the stock does look very promising right now because it has held above this 10.55 in a more bullish fashion than in the past, just be careful if it can clear this rectangle area and clear it nicely, then I think there is a lot of potential for this stock. Janine?
Look, when I look at this one, you know, honestly, I'm thinking about how much alcohol
Having
is
a
being
wine?
consumed. No, not for me, but I was thinking, you know, look at that big run up that happened here, 2016 to 2000 and through 17 and early 18. I mean, it was just absolutely booming. So will it return to that sort of move again? It possibly could. I'm liking the setup that you're talking about. I think it looks great. And I've been actually watching this myself because I've been waiting to see Treasury wine break out. It just so many times it looked like it was going to get going and then hasn't. But now it looks more promising than it has. I guess if it trades below this month's bar, the low of June, then I would be thinking otherwise. But if it goes above where you're saying, I like it.
Well, it had a little period, you know, where they were, I remember we did a report on it where the tariffs to China.
Yeah, well, that was holding it back.
Holding it back for quite a while. Now, it could be at the back end of that. And, you know, the price
they're opening up again. China's opening it up again and reducing some of that. But during that time, they would have established other markets around the world.
They did,
So to me, that looks really, really good. And I think once interest rates start coming down, people will drink a few more bottles of that wine that you're talking about. But anyway, that is it for our weekly hot stock tip. Now is your opportunity to get involved in the show and have your questions answered. Now remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone right now and dial 03 9290 9988. Now while you do that, tonight we'll give you our thoughts on major world currencies. So let's get into it.
On your screen right now is a watch list of the major world currencies. And Phil, look, it's a sea of red all across the board at the moment.
Dollar is king.
Well, I don't know about that at the moment. Looking at it, well,
US dollar,
the US
yes.
dollar's going up, yeah. British pound versus the US dollar is actually down 0.24. The Aussie dollar is doing pretty well, really, compared to the rest of the board. Up there, down at 2.1. Euro dollar, as we come down through Europe, Canada, New Zealand dollar versus the US dollar, down 3%. But the one that's really interesting to me is the Japanese yen versus the US dollar, down 11.5%. And we saw the Japanese market pull back. The Japanese yen versus the US dollar has really been struggling and kept falling to lows. So that'll be interesting to see. It looks like it could be bottoming out. Maybe it'll turn around soon.
It could be. It's quite a significant fall, 11%. And I know the Japanese dollar has been falling quite a bit against the US dollar. So it's not new news. It's been happening for quite a while. But what I thought we could do was bring up the US dollar index again, because we looked at it last month, and it's interesting to see. We were speaking about how the fact the US dollar might, you know, the chart will give us an indication whether they are likely to raise rates or drop rates, because it was in that holding pattern stuck sideways. And so I thought we could reassess where we are with the US dollar. But we've also added a ETF, Dale. I know you love your ETFs, and we've added.
Oh, they're my favourites. I've got my fingers crossed. Okay.
Yeah. We've got a US dollar ETF on here, and we've also overlaid. If we go back to the chart, please, we've overlaid the resources index, the XRJ. Now, the reason we've done that is because the resources index generally is a hedge against the dollar and vice versa, just to see whether that relationship exists. But what's really interesting is that you can see the US dollar, and we've got this green dot here, Janine, in March, April 2020. So this is the ETF where it created a big spike, a peak, and you can see that recently. And now this is a US dollar ETF specifically. It has not taken out the previous high whatsoever, but have a look at the chart of the actual index. That is the March 2020 high, and the real dollar has actually taken out the previous high. So we're seeing a little bit of a divergence happening with the ETF and the US dollar. But I mean, it's quite interesting. It's still stuck sideways. So the jury's still out on it.
Is there any reason for the dollar to be sort of so strong? Do we have any economic reason? Is it because of the market so strong, or the Nasdaq so strong, and S&P 500?
Well, I mean, it's still considered a flight to safety, really. You know, apart from gold, there is still strength in the US dollar. I know they've got that overhanging crazy debt, but people still do find this is as the strongest currency in the world. So,
but it is losing. It's not going to be the world currency probably in 20 years' time.
Well,
Yeah.
Going by cyclical nature and statistics, we had the Spanish and then the Portuguese, or Portuguese Spanish, then the British dollar and the US, and yeah, you're right. At some point, it may go away.
Now we've got Bitcoin.
Oh no!
I'm not saying Bitcoin's going to be it.
Yeah,
I'm just saying
potentially
the world is changing to more what can say blockchain and digital currencies. But there's big talk everywhere that the US dollar won't be the world currency down the track. So be one to watch anyway. But that is it for our thoughts on major world currencies. Now, before we get into the first email, remember to get your questions answered live on air. You will need to text or call into the show. Now, the numbers are on your screen. Now, let's get into our first question. Now, regular viewer Gerard is asking, hi Janine, Phil and Dale. I bought a very good amount of Spartan Resources on the 5th of April 2024 at 67 cents, and today I'm making a profit of 32.84% as it reached 89 cents. Now my question is, do you believe that it will keep going up, and would it still be a good buy today if I didn't buy it in April as I did? Please advise. Regards, Gerard. What do you reckon, Janine?
I'm just wondering why he's asking that. So I'd love to know, is it because, Gerard, that you are thinking of buying more, or is it just out of interest?
Maybe
That's
he
a big
guessed
question.
when he first brought it in, and now he's saying, "Oh, is there techniques around now that I'd be buying it now?" I'm not having a go at Gerard, but you know what I mean. But let's have a look at the chart and see.
Look, right now it looks super bullish, so that's the first thought. It's getting close to my favourite dollar level, as you know. So I'm thinking it's worth a look, but for me, who's generally a bit more conservative, given it's so far from that buy point, I'd just be happy with the profit that I had and be managing that trade, the existing trade. Other than that, I would just check to see when stocks get through these dollar marks. This is big fun, start to have a look at them. Also to see what index the stock is in. If it's in an index, and it could be moving from one index to another as stock prices rise, they can sometimes end up going into another index. So that can be worth having a look, because if they go into, say for example, you've got stocks moving into the 300, when they're outside of that, all of a sudden they've got to be picked up by funds. So it may...
His question is, will it still keep going up? And to me that's an irrelevant question, because it's about where you're going to get out of it. Because who cares if it keeps going up? You're going to make more money, Gerard. It's about at what point do you get out of it.
Well, it's managing it.
It's managing that exit.
Definitely.
So who cares if it's going up? Because nobody ever rings me when it's going up. They always ask when it's going down, what's happening. Gerard's asking going up, which is good.
Yeah, that's really smart.
Any points you want to add, Phil?
Oh no, I'm with you. I mean, now that you're in the stock already and it's going up, it's time to switch your mindset to how am I going to get out of this stock? How am I going to protect my position, and how am I going to make the most out of knowing when to get out while capturing the majority of the trend while it's lasting?
So would you buy it today, either of you?
No.
No.
Okay, so there's your answer, Gerard. No to buying it today. Stay with it while it's going up, and make sure you understand what your exit strategy is, because this thing could go on for days, weeks or months into the future. It looks pretty good at the moment anyway. But right now we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line? Hello, who have I got on the line? Right, they're not coming through at the moment. It's Robert, is it?
Truman.
Oh, all right, sorry, we've dropped them out. So anyway, let's move on to our next question. So our next question is from Jason, who asks, hi Dale, Janine and Phil. Hope you are all well. Yes, we are. I love the show. My question is about stop losses. Is it best to set a stop loss or price stop in CommSec, or should I be doing something else? Also, when do you do this? When I entered the trade, or once the stock I own is falling? I bought RMS, Ray Mealis, back for $1.64 as a medium to long term on the monthly chart, with the stop loss at 10% over the last few months. It has been falling, so I'd love to hear what your thoughts are on the stocks. Or stocks. Cheers, Jason. I'll go to you, Phil.
All right, great
about
question.
Stop losses, into the stock.
Yeah, so I mean, about stop losses, when should you apply a stop loss? As soon as you buy the stock, because that's the moment that you need to protect the position. Now, whether you should put it into CommSec or not. I mean, I don't have any issue with it because, I mean, at the end of the day, you've put that line in the sand there, you've enacted the trade. You can either put an alert function in there if you don't want to, but you know, as long as the stop's in place, however you want to do it, is totally fine by me. Just make sure it's in place. But going to the chart, if we have a look at RMS.
Actually, can I just pick something out of what you've just said?
What's that?
She's getting the boxing gloves out, mate, so watch it.
It's a bit early in the night, but I'd just like to say, you know, if you say to people who are not trained, and I'm not saying that this person isn't trained, but if you do say that you just put it on at the point, your stop loss, decide what your stop loss is at that point. What if people get in the trade and they think, oh, a lot of people won't set one. We know that.
90% of people won't set one.
So I'd be saying to them, you know, prepare it well in advance. Don't wait for that point when you're about to press the trigger and you've got that pressure on you, and then, you know, different things happen, nerves get to you, whatever.
No,
just make sure that you're pre-prepared well in advance and have it documented. Did you want to clarify something?
Now it's your turn to go back.
Can I, before what I actually meant was the moment you place the trade, that's when the stop needs to be in place.
Right.
So you, as soon as the trade goes on, make sure that you place that. So that's the next thing you do is get that stop ready.
Mr. Right? Mr. Right.
I thought I said it right.
No, his wife calls him Mr. Always Right.
But you know what I mean. Obviously, Janine's right 100%. You do need to have that. The plan to sell should be just with the plan to buy. So you do your buy rules and then have your sell, you know, knowing before you enter the stock where you're going to get out. But obviously you can't put a stop loss in before you buy a stock. So once you buy the stock, but anyway, let's move on to the chart and have a look.
I was going to say, now he's in profit.
Yes.
So what's happening, and obviously it's been falling away for a few months.
Yeah, and look, it's nowhere near his entry price, which is quite nice. It is falling away, but it's only really barely falling away. If we have a look, you know, it's gone up beautifully from where he's gotten in March. It's followed on in April. It's fallen during May and June. But if you have a look at the 2 monthly bars, May and June have still failed to take out the low of April. So to me, it looks like it's more consolidating sideways than falling. I wouldn't be too concerned about it right now. Just make sure you put that stop on. And
you wouldn't have it, you'd be moving up.
I mean, according to his rules, whatever those rules are.
The stock looks great, doesn't it?
Mm.
I mean, it's beautiful. It's a classic. It's just risen, consolidated.
Beautiful,
I'm going to show you what I'm looking at because I'm pointing.
Yeah,
risen, consolidated.
Show everybody else.
You know what I'm thinking. Risen, consolidated. I mean, that's just classic. It's beautiful, but it's hit around number $2. It may be a little bit of short-term resistance for it. So yeah, I'm like Phil. Unless it falls below this week's low, I'm liking it.
All right, well there you go, there you have it from those two, and hopefully you've learned a little bit about stop losses on that. Now we have a text from Paula who is asking thoughts on RED stock as it has a nice pullback recently. I would like to buy in for short to medium term. So do you want to take all that one, Janine?
Yeah, this is interesting. Short to medium term, and is it buy now? Do you know?
Well, she's looking to buy it for short to medium term, yes. Short
to medium term. It's interesting because right now it's falling, and perhaps you wrote this prior to the move down this week. It's possible.
Well, she's just sent the text in.
Yeah, well, look, I would steer clear of it right now if I were her because it's dropped significantly. Let's just have a look at the percentage that it's come down right from that high there to this low. It's 24%. So this is sort of that catch the falling knife scenario, and you can just see how volatile this particular share is. It's only taken, 1, 2, 3, 4, 5 weeks to make that move 24% down, but it's still orderly at this stage. And what I mean by that, it's not out of the norm for this type of stock to make these kind of moves. You can see there about 29, that's pretty normal. So if it came back for another week and turned around and then took out that high there, then I would say there's probably a good opportunity there. Reason being is you want to get it on the upswing, not the downswing. You can see it made 30% from that high to the next one. So therefore, there's nothing to say that it couldn't make 30% from this high going up, and you know, the sky's the limit there really, isn't it?
Yeah, but she's trading against trend, and the golden rule of trading is trade with the trend, not against it. So you're breaking the golden rule of trading right now. Looking to get into this stock, so I'm with Phil on this one.
How did Phil? You didn't say anything.
It's not a stock you should be buying right now, but anyway, we do now have a text from King who is asking thoughts on Ventia. I think VNT is a stock ticker code. Only recently listed, so not much history, but have noticed the recent pullback is quite orderly and also looks similar in price and time to the pullback in July 2023. He's also mindful it's approaching the all-time high. Don't own yet, but watching for a push to a new high. So what do you reckon, Phil, for King?
Yeah, it's a very interesting proposition because it is a stock that has only been around for a little while. So if we just go to the chart and have a look here, you'll see that typically these stocks, when they do list, they have periods where they have a brief spike up, if you will, over a few months, and then they fall away below their listing price, find a base, and then make that real significant long-term move. Now, this is a little bit different, albeit it is still early, and it's really shot out since October 2023. So I like the fact that this pullback is quite short, so it does give you, I guess, the impetus that it does want to go higher. But that being said, it does look a little stretched. So I would be, if I'm looking at it at these price levels, King, I'd be looking at it more of a short-term proposition rather than a long-term proposition. I think you might be able to get a better price more if you're thinking long-term.
Anything you want to add, Janine?
Oh, look, I'm liking this one. This looks really interesting. So one thing that you can learn in even our basic course, you'll get a real appreciation. And Dale goes through it himself, so you get to hear his dulcet tones on the subject if you do that course. And looking at the way that this unfolds, it's just a classic. So, there's $2, $3, $4. It's $5 this stock will eventually get to. I can't say in what time frame because I haven't done all the analysis on it. But, I just wait for a short-term pullback. But if it took off through that level again, it might slow down at 440, but there's still more targets above that. Looks
Thanks,
good.
Janine. And Phil, now we've got a text from Jack who is asking, can you please look at ILU for me? I'm looking to buy long-term. So what do you reckon, Phil?
All right, now this is very interesting because unlike the previous stock, this one has been falling. So if we go to the chart and have a look at Iluka Resources, again, just like Paola's email or message, you need to see price confirmation because we always talk about trading on that confirmation. And right now, obviously, the stock has had this period where it looked like it was about to find a low in January, but brief spike up, and then obviously May reversed strongly. June, it's gone on with it and kept falling. So to me, it's positioned at an interesting spot right now because if I just zoom that out, let's zoom out the monthly chart to have a look. But I mean, if it can find support around the previous low here and start rising on up and potentially get through May's high, then perhaps there's that confirmation that it is going to move higher to the more medium to long term. But if it doesn't hold these lows here and falls away, I think it's got further to fall, and perhaps you'd be looking at somewhere around these levels back to the $5 or even down to the $4 level before this finds support. But regardless of what happens, right now it is falling. So you want to see that confirmation that it starts to rise and let someone else be first buying it and jump on when it does turn around.
Okay, again, don't go against the trend. Well, that is it for our take on Iluka. Now the guys have put together their top 5 list of stocks, REITs and ETFs to buy now. But before we get into them, I wanted to discuss a theme that's been popping up with callers and emails into the show of late, and that is the topic of dollar cost averaging. Now, it's no secret that this strategy is loved by mainstream finance professionals, but rarely has it been put under the test to actually prove it is a better way to invest. So tonight, we will do just that. Now, to get started, let's share some of the pros and cons, and then we'll discuss whether it's a strategy worth using or just another market myth. Okay, so let's now go to the team. Now, Janine, dollar cost averaging, what is it? What are some of the pros according to those who promote it?
Yeah, it's really hard for me to talk about the pros on this, however I will. Explaining it, it's simply just putting small amounts or an amount and repeatedly doing that over a predetermined time, so the same amount each time. And the whole idea is that in theory you'll be able to get a lower average price. But we know it doesn't always work that way, and often people can end up being in a losing situation and they're buying as the stock's falling long term and continuing to add to that risk.
Well, this came out of that whole 1970s, 80s insurance, getting into those insurance investment products where they wanted to they sign you up each month, put money into this every single month, and you get an average unit price for your fund. So it's just been an expansion of that in my book. So yep. I'm with you, but why do it?
I'm not for it.
You're not for it. No. Okay, well, we're not even going to ask Phil at the moment. But anyway, we'll put those to the test soon, Janine. Now, I wanted to go to you, Phil, as you've looked at both sides of this. So can you give us some of the cons on this?
Yeah, where do I start? There's quite a lot. But first up, look, the market generally rises over time. So, this dollar cost averaging and getting in over time, you're diluting your best price. If you were to get in on a single occasion and buy those lump sums. And there's no real method or rhyme to it. So it takes away the opportunity to do good investing. Really, pick good stocks. It takes away all that opportunity and just gives you this blanket basic strategy. It's not even a strategy, but approach. So it takes away the opportunity to find good investments, and it dilutes your best price for. They're the two that come off the top of my head, but there's so many more.
I'm sure there's a hell of a lot more, but anyway, if you've been watching this show long enough, you would know my thoughts on it by now. Now, if you still aren't sure where I sit, then have a look at this from my second book regarding dollar cost averaging. This strategy is flawed because not only has the investor lost the opportunity to invest their funds in assets that are rising in value, but they are taking higher risks investing in assets that are potentially falling in value with no guarantee of making a profit. But hey, don't take my word for it. Have a look at what Morningstar says about dollar cost averaging, or DCA, from an interview on their website. DCA only makes sense if the forecast is that the market is going to go down for a while and then come back up. But if you don't accept that forecast, then DCA really doesn't make sense. Now, can DCA outperform lump sum investing? Yes, it can. But in our study, we found that it was only the case about 10% of the time. As I mentioned, that was Morningstar's opinion. And so when you read things like this, it really does make you wonder why it is that people still follow this approach. Can you think of any reason, Janine?
Yeah, I can.
Why?
I can think of lots of things. We know a common one is that people don't do their research. How many times do we see situations where people are just blindly following what the industry are telling them? And because it's such an old and entrenched theory that is being led, and even the likes of Warren Buffett, I think, used to talk about it, but in a very different way to the way that people actually practice it today. And, I just think it's so ingrained. That
I think you're saying they take it out of context to what it should be.
Well, one, they take it out of context, and two, they don't do their research to see how it actually would end up. So you can use, this is what we do all the time. This is what technical analysts do. We use history to prove things to ourselves, and that's what I'm suggesting people could easily do by just looking even on their broker's website at a chart and proving what would have occurred if they had have bought parcels over time.
In my mind, what they're doing is they see a share that they own going down, so they buy more of it because it's cheaper, because they don't want to do the right thing and that's sell. And then come back in after it bottoms and finds some support and goes up, which is what you were talking about, Phil, earlier. It's better
the best opportunity.
It's the best opportunity. Now I want to show you a practical example from Seeking Alpha on what happens when you dollar cost average as the market is rising. Now, to the left, dollar cost averaging is used, and to the right, the total position is bounced on the individual date that was dollar cost averaging. Now, the results speak for themselves. But Phil, let me ask you then, the vast majority of people use this strategy to buy more of a stock that is falling, not rising. Does that make a difference?
Yeah, that is the common approach. More recently. And does it make a difference? No. I've got a good example that I can show you. And this isn't the only example that we have. You guys know that there are so many stocks that we can show. But what I want to do is show you the chart of Telstra, one of the biggest stocks on our market. And let's get into the chart right now so you can see clearly what we're talking about here. And let's just say, for example, this is the whole history of Telstra all the way from 1997. And, this stock was one that obviously, so many people know about, so many people bought. We constantly hear about it on the show, but what I've marked here are these horizontal lines where it's got buy 1, buy 2, buy 3, buy 4, buy 5. And the idea is, as the stock started falling, the dollar cost averaging method was buying more and more positions of this stock, equal portions, right? And as it did that, it would work out that at $5 would be the average buy price. Now, you look at the stock today, and we're talking 1998 or 1997 to 2024, and you would still be losing money. You'd still be below your average buy price by using dollar cost averaging.
And there are a lot of stocks you could have done this on, couldn't you? Not just Telstra.
There are a lot of stocks I could have done that on. And what I've also marked on the chart is, conversely, like we spoke about, finding that best entry. What does that actually mean? So if you go to the chart and have a look, that best entry is using some very simple techniques that we do teach in the course. And these lines may look simple to you, but there are rules that come with these lines. So there is some work put here, but it isn't rocket science. And just using these techniques alone, you can see the green dot is where you would buy a break above a momentum line, where you would sell a break below a momentum line. In this instance, look at the opportunity cost of staying out of the stock for all these years. You get in, obviously it's not a huge winning trade, but it is a winner, and you get out, you can employ your money from this date to use on another stock or have another opportunity to rebuy the stock. A second opportunity, look where it gets you in just by using techniques to time the market. It gets you out all the way above here, a beautiful profit, avoiding all this downtime as well, gets you in for a third opportunity, and now perhaps Telstra is going to line up with another opportunity. But it speaks to the fact that this timing the market myth, it's not true. And we always say go and have a look at a chart and see, because you can outperform, and you need to look at charts to see that it is possible. And on stocks like Telstra, over their whole history, it's a perfect example.
Oh, well, all right then. That shows you how simple it needs to be. Anyway, let's switch gears now and take a look at the top 5 list the guys have put together. But rather than just give you our picks, we are going to take it a step further tonight and show you how we've broken down our selection process to come out with our best 5 so that you can do it too. So Phil, can you take it away?
All right, we're giving away secrets, are we?
Well, you are, not me.
No, what we wanted to do was just show you how, we cull stocks, because we always talk about how do we look at 100 stocks and bring them down to a couple and see. So we're simply and fast. So we're overlaying some fundamental analysis that we use, and then we're going to move into the technicals and go through that whole process with you so that you can do it too and show you how easy it is. So let's start off with a watch list. So what I've got here is a watch list of the ASX top 100 stocks. And we've got the dividend yield here, the PE ratio here, and the EPS. Now, the dividend yield obviously shows you the income that you're going to receive. The PE ratio and the EPS are fundamental indicators or markers used to show you whether a stock is generally overvalued, undervalued, and whether it's actually making money or not, more than anything. And what I've got here, what we're able to do with our program is put some rules around that. And where you see it highlighted green is where there's a dividend above the market average, which is about 4%. And you'll see under the PE ratio column, it'll be green where the average PE ratio is anywhere between 10 and 20, maybe just a little bit around there, which is the industry average of a stock that is not overvalued.
I just love this program and what you're doing here and what you're showing everybody, because it does just take so much work out of it, doesn't it?
Yeah, and
really quick.
You just put your parameters in, but if we just go back to the watch list, so I can finish off explaining the third bit, which is the EPS. Now, we look for double-digit EPS because that shows that the company is earning and growing, right? So put in those metrics in your chart, and this is how quickly you can go through the top 100 and find an opportunity. So you scroll down, and we're looking where we see a triple match. There you have it. Great EPS, a PE ratio which is in that 10 to 20, albeit just a bit above, and paying an above market dividend. So Commonwealth Bank.
And making record highs.
Put on the list. Macquarie Group, another one coming through. Bang. Keep scrolling down. You can do it as quick as you want. JB Hi-Fi is another opportunity, and we finally finish off with Rio. So from all these top 100, we can quickly get a snapshot of the health of the company, whether it's making money and whether it's going to be paying us an income worthwhile for us to look at, because these top 5 today is about getting an all-rounder, something that does everything. And we've done that with a few more watch lists, because we also show, if we go back to the chart, how you can do it on the REITs, Jenny?
Yeah, REITs. We've got to have some REITs, don't we?
Yeah.
And looking at that, you've got here dividend yields, which look really juicy, and they would be on property stocks. You tend to get above average with these, and they pay 4 times a year usually. So you've got Stockland there, 7.48. What have we got? S Centre, 7.84, nice little one in there. Vicinity Centres, 8.66. So it's just a matter of getting the timing right on these. PE ratios are all reasonable here. We've got some higher ones there, which I'd probably stay away from those ones unless there was some compelling reason. But look, there's no earnings in there either. So
well, that's the part that got me, really interested with this particular sector. Most of the EPS are all negative or very, very low. So the earnings are quite low, and this can happen. And more than anything, it can show you that, hey, maybe this is a sector or a list that you should potentially stay away from for now. But even though we don't have a tick off with all three, we do have two. So we've got National Storage, which has a 7% yield, a nice PE ratio, but look at that, it's got a negative EPS. So one to stay away from, which leaves us with Rural Funds, a 7% yield, 9% PE ratio in that 10 to 20, and it is a positive earning. So one to put on the list to see how the chart looks. But moving on to the ETFs, now you'll find with ETFs you cannot get the PE ratio on them. Some say you do online, but on our program, it doesn't show it here. The EPS it does show, and the yield. And I mean, given all the yields are quite low, apart from some of these, tech and lithium ones, you're looking for that growth, I guess, because these ETFs that we're looking at are not index ETFs. We've chosen those ETFs that are different.
Yeah, specialty ones.
Specialty ones to give you different exposure.
Well, Dale will be happy now, won't you?
Very happy.
Yeah, and that's how quick it is. Done. From there, we've got...
So which ones? You've got three here that have got good dividends. So you're saying you wouldn't pick any of these, or you like these ones?
I think with the ETFs, because they're specialty ETFs and generally the dividends aren't the best, I'd go for the EPS. I'd go for stuff that's got the growth potential more than anything.
Okay, so don't worry about the dividend and look for the growth, check the chart and see whether, say, global copper miners might be a good one.
Could be an option,
or global uranium might be a good one. I know you like that one.
I do, and I know you don't like it, so. But
I'm excited to hear about these 5 stocks, though.
Yeah. So yes,
let's put me out of my pain or misery. How's that?
And that's the beautiful part. I mean, we'll go to the stocks now. So we just mentioned the, JB Hi-Fi was the first one. So we've ticked off all the boxes on stocks that are, profitable, do look good fundamentally, pay a nice income. And I mean, Janine, have a look at the chart.
Looks nice, doesn't it? I mean, it's pulled back. We've had a decent fall in price from the high. If we just have a look there, around the 15% mark, and it's just sprung right back through that. If it takes off through those highs, it'd be very interesting to watch JB Hi-Fi go, especially in the second half where we like to see towards or even the last quarter where retail spending is going to be the focus again, and the market's going to be looking at that. And I'd say JB Hi-Fi is going to be in the pole spot there. So I'm really liking JB Hi-Fi. It can be quite volatile, even on the monthly chart if we have a look there. But it doesn't take long to make a return. It could be like 5 or 6 months and you can make a decent return out of JB Hi-Fi. Look, during COVID it sprang right back. If I don't count it right from the bottom and just part of the rebound, it's about 45%. So sort of those 30 to 40% returns if you're getting in at the right time on JB Hi-Fi. That was sort of the standout period there right before COVID hit, 79%. So it's nothing to say that we could see another move up from JB Hi-Fi. We could be heading towards that $80 mark over the next year anyway with JB Hi-Fi. I like it. What are your thoughts, Phil?
Well, I mean, I like it too. How can you go against this stock? It's just continuously rising, had this really nice consolidation type period that it's broken out of, come back to test that previous all-time high, now rising again. But, I mean, and for people looking at this and thinking, it has to be a long-term proposition, it doesn't have to, because those watch lists will update. Every 3 months you'll get new information, new stocks will come in. So you could even be looking at this for maybe a 3-month to 6-month proposition, more medium term. But anyway, moving on to the next one, which was Rio now.
Yeah, so what your message was, don't get fixed in your timing in terms of thinking I'm a long-term investor, therefore I have to be long-term on it.
Correct. Yeah, because you're constantly going to be getting that new data coming through on those watch lists and checking it. It took us not even 2 minutes to check 100 stocks. So the next stock we have is Rio. Now, obviously, Rio has been a bit disappointing. Obviously, it's come into those 3 all-time highs, or 3 highs that it hit back in July 2021. It did it again in January 24. May 24, it had a third test of that $136 level, and it hasn't been great since June. But to me, that spells opportunity, because in the past you can see, back in February 24, it had very similar price unfolding where it fell away but then reversed. It's done it all throughout the history of this stock. I mean, from these lows in September 2022, even with these quite volatile, if you will, falls, the stock is still in a medium-term uptrend. So to me, the way it's fallen, that spells opportunity, and this is definitely one to be watching right now to look for entries, albeit short, medium or long term. I actually quite like it.
Yeah, look, me too. FMG's actually had quite a big fall recently. It's taken out that recent low there. It'd be really interesting to overlay FMG with Rio, but we know the overall chart looks different. I'm not going to do that right now, but I mean, obviously it's got a big stumbling block to get through. So possibly fourth time lucky that one high there, second and third, as Phil's saying. But it could still take out the March low. There's a real risk of that. So, but we're really at that this is what people have to realise. We're right at the 11th hour of seeing what the market's going to do over the next few months. So you really need to be continuing to watch the show and staying tuned with this. If it takes out this low, Rio, we'll be talking about Rio in the months to come, $117.99, then obviously it's going to take out the next low. But if it manages to hold above that, heads back above 130, then it could push through that high.
I agree with you.
Yep. Next one,
Yeah.
CBA is always a favourite with investors, medium to long term. It's getting to that next level, that 130 level. We could see a little bit of a pullback in around that 130 or just into the 130s, but just doesn't that stock look really nice at the moment?
It's funny because, I mean, you know, we were looking at our market report and we did an exercise back we set the clock back to 2003 and we looked at stocks that pretty much look like CBA is looking now, and you know, you'd be looking at it and thinking, some traders would say, oh, it's run too far or it's run too hard, I'll stay away. But then you move the clock forward from 2003 to just before the GFC, and these charts that look like this performed fantastically. They gave a whole bunch more growth. So, you know, if there are those of you out there that are looking at these charts and thinking, oh, it looks a bit toppy, just have a second thought, because the market...
We were talking about yesterday on the market report that Phil and I do. We're talking about bank stocks and material stocks and how we thought financials are still going to be driving the market. We're just waiting for materials to really find some support. Materials meaning BHP, Rio and Fortescue. They're the main ones because S32 is flying at the moment. We're doing really, really well, looking really good. So once those material stocks start to move, the market will move, and then it'll bring everything else with that. So that's why, look, we're at the 11th hour and I'm excited.
But I mean, you can't fault this CBA at the moment. It's just continuously going up, and it is doing it on that gradient. I mean, because, you know, people need to realise as well, it had a long period where it was stuck sideways. So there's a lot of pent-up energy for this stock that it is releasing right now, and there is definitely more room to grow. June, look at that month. I mean, closing on the high, and if you look at our market, June has been quite lacklustre. So definitely one to put on the watch list, I think.
Another couple of months up anyway, at least, isn't it?
Yes.
All right, that's CBA. And the next one after that is Macquarie, which looks really nice. So Macquarie's still got room to go. It's sort of lagging CBA. It's not through its all-time high, We've got another 6.4% or 6.5% to get through the high. And then we've got some big numbers overhead for targets for Macquarie, which I don't want to, you know, tell everything now, because at some stage we're going to, in the not too distant future, we're going to be doing a show on the banks. So we don't want to give away all the secrets, but we do like Macquarie, just long term looking at it. If you have a look at Macquarie, you get a chance to have a look. Some of these long runs, you know, 200, this is a really good stock. People underestimate this one. It's probably the better of all the banks to pick and have in your portfolio because of the ranges that you can get out of it, one off the COVID low. So it's all relatively consistent. So I'm expecting the same sort of opportunity off this low, even if it did, you know, 50 or 60%, you know, 240, 250, somewhere around there could be a realistic, you know, level for Macquarie, you know, over the next 6 months or so.
Yeah, and the thing I really like about this stock is, you know, every time it breaks out to a new all-time high, it goes on with it. Like, you see this period here, broke out, went on with it, broke out, albeit obviously this is around GFC, but broke through to a new all-time high, didn't really have a big pullback all the way until that COVID, which was that one-off scenario, but goes on with it. Again, broke through and goes on with it. So I'm with you. If it can get through this all-time high, I think there's a lot more in this particular one.
Well, it's very similar to what happened back here prior to the GFC. So we saw that sideways consolidation, and then from that high, we got a decent rise out of it, sort of about 20-odd% above the high. So if we just look at that before we move on to the next one, you know, there's 20 above the high. It's roughly at that level I'm suggesting. So yeah, I'm liking Macquarie. And next one is...
So now we move to that, the rural funds, our property stock. Now, is this going to make the top 5? It might. It might. I don't hate the way the price is set up, to be honest. What's real interesting to me is obviously it's fallen away since January 2022, but it has come into that all-time high, and this fall has not taken out the 2019 fall. So from a long-term perspective, it could be that this stock is just moving in that long-term gradient or momentum that it's been moving in, and obviously it's finding its feet around this price level at $2, giving us these higher highs and higher lows, a bit of a mixed bag. But I mean, if it can get through $2.20, I think this gives you a good indication that that long-term or medium-term uptrend is resumed, and then obviously from 220 there isn't really too much in the way of resistance all the way up until the all-time high.
Yeah, look, I mean, I'm just looking at this consolidation on the left-hand side and seeing that it looks like it's got to come back somewhere there. So if we just have a look, so that's probably 15, maybe 20%, somewhere in there. It could do potentially, but it could get sort of slowed down around 230 in the short term. But I agree with you. I like it at the moment. If it takes out last week's low, this blue bar here, which is the low of $1.98, if it goes back below that $2 level, then I'd be very concerned about it in the short term.
Looks exciting to me. Some great stocks there, guys. So hope you check it out at home, or check all those stocks out at home for yourself. Well, that is it for our topic for tonight. Now stay with us for more emails and stocks to go through. For those watching on YouTube and Facebook, remember to comment below. You can watch all of tonight's show plus additional exclusive content, including more stocks from tonight's show on Talking Wealth TV, your streaming network for all things wealth. So head over now and grab your free 7-day trial. Now on talkingwealth.com, you can also watch our weekly Australian stock market report, where Phil and I share our view on the market, answer questions and get into more detail on stocks. And on top of that, every week we share multiple stock tips that one will pay for your yearly subscription to Talking Wealth. You'll also get access to hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset and well-being, fintech, crypto, artificial intelligence, business and loads more. This is all on talkingwealth.com. Moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 0392909988, or you can text your number or text your question to the number on your screen. Now whilst we wait for your call, let's get into our next email. Now Neil is asking about PolyNovo. Hi team, PNV has had a good run this past 6 months. I feel if it breaks above the March 12th high of $2.52, then we could see potential upside to around the $3 mark, around 20%, or a stretch target to the all-time high of $4.10. Looking at a short to medium term trade, I would appreciate your thoughts. Thanks, Neil. What do you reckon, Janine?
Well, when I saw the stock, I thought, this looks lovely. Just have a look at it. I mean, it's a trending stock. It's a smaller stock, but I can see why he likes it. The only thing that's a concern with this one, though, is the volatility in the short term. So you can see here, it dropped in August 2022 quite swiftly. So you've really got to have your wits about you in trading this stock and have those rules and have your psychology in check for trading this one. But just look at the angle of that rise going up there. It's lovely. It's respecting all of those levels and holding on. I think, if it gets going through these highs here, I think it'll just keep going up.
I think Neil should probably watch our show last week, because PolyNovo was my hot stock tip.
There you
Maybe
go.
that's
Neil,
why
go and
he's
watch
looking at it.
Phil's hot stock tip from last week. So you like it, obviously.
Obviously, yeah. Yeah, I mean, yeah, there's quite a lot of information we put on there. But, since last week, the stock has pulled back a little. But, I mean, from the bigger term perspective, we were looking at it on the monthly chart and just, showing you how it is really compressing right now. And, you're seeing that, obviously, with these making them higher highs and lower lows, and at some point it is going to break out, and I really like where he's put that marker to break out above that $2.50 level. I don't see anything wrong with it, and $3, the way this moves with its volatility, is definitely achievable.
I'm sure Neil's happy with that. Now we have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
You got Truman, Dad.
Hi Truman, thanks for calling in. What's your question for us tonight?
I've just got a question about Webjet, codename Web.
Yep.
Yep, it's just the goal is for long term. It's a top 50 stock. Fundamentally, it's been showing some good growth, and yeah, it's sort of been consolidating since November 2020 to 2022, but started a 70% uprise since then. Currently showing similar patterns as 2016 to 2018 before it hit all-time highs.
Yep.
So yeah, just wondering what the panel thinks if it can hit those all-time highs again.
Yeah, it is looking good, isn't it, Truman? So glad you pick Webjet as a stock. The guys have got it up, and I'm sure they're going to answer your question. So Truman's asking medium sort of ish. Maybe a bit longer.
Perhaps, Janine, because I couldn't hear anything.
Oh, sorry. I mean, we actually looked at this stock last week too.
Yeah,
so
I was
he's
just
looking.
going to say that.
So he's looking to buy more medium to longer term.
Okay.
He said it's been up about 30% in the last few months, so it's looking much better now. After finding support, looking at similar patterns to what it was before. Is that enough? Did I get it all?
That's great. We can go back and have a look last week because we
So
did.
you're telling me I'm
Your
forgetting my
is-
memory.
Yeah, your memory is better than you think, isn't it?
Yeah, it is. Well, better than you
remember.
think, anyway. That's good. So can we bring up Webjet?
Yeah.
Yeah, so it actually looks really good, as we said last week, Truman. So, that hasn't changed. There's some really nice levels that it's working on in the short term, which I'll just identify here. You can see it consolidates and it moves on and it gets stuck sort of a little bit range bound and then just respects those levels again and off it goes. And it's doing the same thing even with that high. Now, often when you see these sort of highs where a stock rips up, goes through a level and then comes all the way back down, this can often be a test of what's is still yet to come. So I would suggest that if it keeps pushing up towards that line, then it could get through. But I mean, for me, the ideal place to be looking to get in, believe it or not, was somewhere around here. If you're not in it now, then you just have to weigh up your risk. But there is a 40% potential on it.
I think Truman's got a good stock on his hand here. So I don't know, is that my executive vote? I do like it. So 2 thumbs up for me, Truman. So well done and thanks for calling in. Now we've got a text from Nathan who is asking, can you have a look at DSK for the long term? It's double-digit EPS at all-time lows and trading close to its book value per share. So what do you reckon, Phil?
Look, let's just go to the chart because it is in free fall.
Terrible.
Terrible is the word.
Okay.
And I like the fact that you are looking at the EPS and the fundamentals for this stock, but it's always about marrying up those fundamentals with the chart. Now, the examples we showed you before with the good fundamentals and the charts look completely different to the way this looks.
Well, the fundamental tells you what to buy. It doesn't tell you when.
Exactly.
That's what you're saying at the moment. When is not yet now.
Not yet, nowhere near right now.
And there's some real conviction too in the selling there. You can see the volume is supporting that. There's some really strong bars here which are above the average, pushing it down. Look, the only hope I think this stock has got is the fact that the market is in a boom phase, even though this is not. So there could be a little bit of a short-term turnaround over coming months and towards the last quarter of the year. That's really, Dale, the only hope that I'd be thinking, and it could try to push up back to that $1 mark in that process.
Yeah, but would you buy it right now?
No way.
I think the good thing for Thurman, sorry, not Thurman, and Nick, I believe it was. Sorry, I've got it wrong. But Nathan, sorry. The good thing is because it is falling in such a uniform manner that at some point this stock will break through a momentum line, and that doesn't mean that you should be buying it initially. But what it'll tell you is that it'll give you that first sign that maybe the momentum is changing to the upside. So then it's up to you to really watch the stock, get your rules in place and get ready. But right now, the way it's falling, it's...
Well, after such a long downturn, sometimes when it goes through, or a lot of times when it goes through that momentum line, it does a dead cat bounce. So it tricks a lot of people. So just be careful of that one too, Nathan, anyway. But keep asking, maybe send another email in another month as well and we can have another look at it for you. But anyway, now we've got another caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Anuj.
Welcome to the show. Thanks for calling in. What's your question for us?
I'd just like to get your views on PLS.
PLS, yep.
Yeah, I believe it's dropped about 25% in the last month or so, and it seems to be the most shorted stock in the market.
Yep. So you're looking short. You haven't bought that yet? You're looking to buy?
No. I've actually got a substantial holding. I hold about 100,000 shares, so I just want to get your opinion as to what I should do.
So you're looking to whether you should be holding it or getting out of that. That's what you're saying?
Correct. Correct.
Okay, fantastic. Well, the team have got it up now for you. So thanks, Anuj, for calling into the show. What do you reckon, Janine?
First thing that was going through my mind was you've got that much money in the market, Anuj.
He's got 100,000 shares in this one, not dollars.
Dollars.
I don't know what the dollar figure is.
It is a $3 stock.
Okay, so he's got a lot.
So with that kind of money, I can't even express that you should be learning how to do this yourself. The first thing I'd say though is it's actually taken out an important low. So this low here, the one back, and I wish I had some happier news for you at this time. This low, $3.10, even though we really like this stock, we have said in the past, if it takes out that low or if it starts to pull back in a serious way, then that's it. We think it's got further to fall. So it may find support there. There's possibility, but it would have to rise really strongly within the next week or two for that to happen. If it closes at the end of any week below this low here of 310, I'd be concerned it's heading back towards 250.
Okay, so yeah.
Do we know when he bought at all?
No, he didn't say, but he just
Okay.
said there's 100,000 shares in this stock.
Yeah.
And obviously, do I hold or do I get out of this stock? And obviously, Janine's drawn the line in the sand. If it goes below this, then it's probably, you have to really seriously think, should I be keeping this stock or getting out of it? And that's really, it's going to be a tough choice for you, but thank you for calling in anyway. So hopefully we've been of help to you. Now we've got a text from Andrew who is asking thoughts on ResMed as the share price has come off around 13% over the last 2 days and currently sits at around an important level to the last move. Have traded this year but not own at present. So I don't think he owns it at the moment. So what do you reckon, Phil, ResMed?
ResMed, yep, interesting. If we go to the chart and have a look, this stock obviously has been rising really nicely since September 2023, but it has gapped. It's fallen out Friday 21st of June, gapped this week. So, obviously right now is definitely not the time to be buying it. But I mean, it has come back, and he's definitely right. It has come back to a level in the past where the stock has found support. So I'd be watching this level very, very closely to see what happens. The fact that it has gapped out, that's something that is, stocks generally do come back and fill their gap. But I mean, to me, that's a more of a worry rather than a positive note, to be honest.
Would that be paying dividends now? No. Probably, I don't know.
I'm not sure, but look, I mean, that's not a dividend, Dale. That's a news announcement, which I felt when I heard that news, I thought it was like a like it seemed like, okay, the price went up on great news, and then somebody's bought out some more news, and then the price has fallen down. Just sort of read between the lines. That's what I always try to do.
So stay out of ResMed at the moment. That's what you guys are
Yes.
saying anyway. Well, moving on. Ben's looking to buy a house and asks, "Hi team, I'm wanting to build a portfolio to eventually turn into deposit on a house. Now I haven't built my plan out more than that, but I'm looking for growth, so would look to trade stocks going up and get out where my stop loss is triggered. I'd love to know your thoughts on FMG and if a stock like this would be suitable for what I want to achieve, and should I factor in dividends? Kind regards, Ben." What do you reckon, Janine? I know you're going to give him a great answer.
He's got the right idea.
He has.
Definitely got the right idea, Ben. Well done. The only thing here is it's just a waiting game with FMG because it's fallen back. It's coming back to a really strong support level here under these lows. So the low here is roughly, let's have a look, $18.77 all the way across there. It's possible that FMG could come back to that sort of level. But look, it's had 1, 2, 3, 4, 5 weeks in a row down. It may have finished the run, but it's going to be many weeks yet before we know. Just stay tuned watching the show because we will update on this
Part
one.
of the question is
Should he get
looking to
dividends?
get a deposit. So he's mentioned FMG, but I'm thinking he's thinking, oh, maybe I put all my money into FMG to get the
That's
money out.
nuts.
So that's what I was going to ask. What do you think he should be doing? No, he doesn't tell us how much he's investing though. So what do you think he should do? Split it over a couple of shares, 3 shares, 4 shares, 5 shares?
What was the time frame that he was talking
He
about?
didn't tell us the time frame either.
Okay.
So that would have helped.
It
but
would
yes.
have helped because without the time frame, it's really, might be taking it out of context, but I would never put all that money into one share for a start.
Okay.
And sort of if you can spread it over, 5 shares to get started, that's always great. But ideally in the share market, you want to have a medium to long-term time frame. So ideally, you want to be in the market for 5 years plus. That's the thought. Doesn't mean you hold the shares for that amount of time. But if you're looking at FMG now, I'd say your timing is perfect because now you'll just be able to sit there waiting for the right opportunity for rules to trigger on it.
Perfect. All right. Now, Remember to show your support for our channel and smash that like button. And if you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now before we let you go, what was your favourite part of the show? Was it Phil's hot stock tip, our stock for the night or our topic for the night, or was it a viewer question? Let us know by commenting below. Now thanks to those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into top 10 growth stocks to trade in the bull market. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.